So what if I told you that the single biggest thing holding back your investment returns isn't the market, it's you? Or to be more specific, it's your ego. Today, we're going to dive deep into how you can ditch that emotional gut feel investing and start building a truly bulletproof professional strategy. All right, let's jump right in.
All right, so let's kick things off with a trap that, honestly, so many of us fall into, and we usually don't even realize it's happening. It's what I like to call the identity trap. You know, that moment when a stock you own stops being just a line item in your portfolio and starts becoming, well, a part of who you are.
Yeah, and this is what I'm talking about. When we get invested, and I mean emotionally invested, we almost always end up in one of two camps. So take a look. Which one of these sounds a little too familiar to you? Are you the cheerleader or are you the hater?
So on one side, you've got Camp A, the fan. These are the true believers, right? They're all in, and any criticism of the stock feels like a personal attack. Then over on the other side, you've got Camp B, the hater, who just can't see any possibility of success. It's all doom and gloom. But here's the kicker. They're both making the exact same mistake. They've stopped treating the stock like an asset and started treating it like a part of their identity.
And this is the whole point, really. The smartest, most successful investors, they're not in Camp A or Camp B. They're playing a totally different game. It's a game where emotion and ego get checked at the door. They hold an investment only as long as their original reasons for buying it are still valid, and they sell the second those reasons change. It's that simple. And, that incredibly difficult. So, okay, what does this professional, detached mindset actually look and sound like in the real world? And let's be super clear here. Detached does not mean disinterested. It's about being ruthlessly, unapologetically objective. I mean, we've all heard this, right? Heck, maybe we've even said it ourselves. It's passionate, it's full of belief, but it's an all-or-nothing emotional statement. It leaves absolutely no room for nuance or for the very real possibility of being wrong. This, right here, is the language of identity, not the language of smart analysis.
Now, this is the professional alternative. The best investors, they build this kind of firewall between who they are as a person and why they bought a stock. This is what allows them to confidently argue the bull case, saying here's exactly why I think this will succeed, while just as easily turning around and explaining all the risks, saying, and here's precisely what would prove me wrong.
And this is what that actually sounds like when you talk to a pro. It's never, this stock is amazing. It's much more like, I believe there's a 70% chance this works out because of A, B, and C, but I'm keeping a very close eye on X because that's a major risk. See the difference? That ability to believe in something while at the same time fully understanding how it could fail, I'm telling you, that is the highest level of investing.
Okay, so how do the pros actually maintain this kind of clear-headed thinking? Well, they use a very specific and very powerful tool, the investment thesis. So let's break down what that actually is.
So, to put it simply, an investment thesis is your reasoned, written-down argument for why you're making an investment. Seriously, think of it like your battle plan. It's not based on some gut feeling or a hot tip. It's backed by solid research, and it's the document you're going to turn to when the market starts going crazy.
So what actually goes into a solid thesis? Well, first, you've got to state the investment and your goal. What are you trying to do here? Growth? Income? Then comes the why. This is the meat of it. You're looking at the company's fundamentals, its competition, the big trends that support your case. But, and honestly, this is the part most people skip, you have to detail the potential downsides, the risks, the things that could completely blow up your entire idea. And finally, you have to define what success and failure actually look like in cold, hard numbers.
And out of all the questions you're going to ask in your thesis, this is the one. This is the one that matters most. Answering what could go wrong is the bright, shining line that separates a professional strategy from just a hopeful wish. It forces you to argue against yourself, to really challenge your own beliefs, and that makes your position infinitely stronger.
And trust me, the simple act of writing this all down is an absolute game changer. Why? Because when the market inevitably goes nuts and every emotional fiber in your being is screaming at you to panic sell, you don't have to rely on some vague memory of why you bought the thing in the first place. Nope. You can pull out this document, your rational self frozen in time, and make a calm, clear-headed decision.
Okay, now, let's be real for a second. Creating a super detailed thesis for every single stock pick, that's a lot of work. It's not for everybody. So let's talk about another path, an alternative for investors who want a simpler but just as powerful way to get those ego-free returns.
Look, the ultimate
cold, hard truth of the market is that it does not care about your feelings. It doesn't care about your favorite CEO or how much you believe in a product. It just doesn't. And that's why a foundation of simple, low-cost index funds can be the ultimate no-ego strategy. Instead of betting on one single horse to win, you're just betting on the whole race. If Apple wins, you win. If its biggest competitor has an amazing quarter, guess what? You win too. You are completely and totally agnostic.
And this right here nails the benefit perfectly. Just think about it for a second. There is zero need to be right about any single company. You completely remove the emotional roller coaster of picking winners and losers. It's just a pure, systematic strategy for consistent wealth building, one that is totally detached from your ego.
And all of this brings us right back to the most important takeaway from our explainer today. This is the one shift in your mindset that can literally change your long-term results.
So here's the bottom line. Your portfolio shouldn't care how you feel. The real goal isn't to prove you're the smartest person in the room or to be a cheerleader for your favorite company. The goal is to have a rational, testable thesis that you can update or even completely abandon based on new evidence, all without it feeling like some kind of personal failure.
So, I'll leave you with this one final thought. It's a really simple question, but your answer reveals everything about your approach to investing. Ask yourself, honestly, are you investing to make money or are you investing to be right? Because that answer, that could change everything.